Hello and welcome to Wall Street Training's module on how to analyze a 10K. My name is Hamilton Lin, President and Founder of Wall Street Training, and I have a background in investment banking and mergers and acquisitions, having worked at Goldman Sachs' Investment Banking Research, Bank of America Securities' Mergers and Acquisitions Group, and several other smaller boutique investment banks, again, all focused on mergers and acquisitions. In this particular course, we will learn how to analyze a 10K, plowing through the footnotes and understanding the types of information we can extract from the management discussion analysis, the MD&A, the financial statements, as well as a detailed review of the variety of footnotes that are available to us in the financial statements. Please do note that this course and the materials from this course are copyrighted and may not be disseminated or reproduced without express written permission from Wall Street Training. The next footnote that we'll quickly look at is variable interest entities. This is via FIN 46, Financial Interpretation number 46 a la Enron. Basically, in a very short nutshell, what happens is in the past, VIEs used to be known as special purpose vehicles or special purpose entities. These were specific entities that were set up for a very specific purpose, hence the name special purpose vehicle and entity. However, because of the accounting rules at the time, for instance, what Enron did was they did not have to disclose, based on how the rules were written, the fact that they entered into these agreements in which they promised to make future payments. Now, however, since the Enron blow-up, you now have this thing called VIEs, variable interest entities, in which you must disclose your potential liability and consolidate, not just disclose, but you must consolidate the liabilities of these variable interest entities as long as you are the primary, economic beneficiary of the profits or losses. So if you're the primary economic beneficiary of these profits and losses, you must not only disclose this, but you must consolidate it into your books. What does that mean? Let's take a quick example. Looking now at page 10 on our sample comparisons. If we were to look at page 10, let's look at BlackRock again. BlackRock discloses to us that they act as a collateral manager for 6 CDOs. CDOs are simply collateralized debt obligations. Collateralized debt obligations. These CDOs basically invest in high-yield securities and bank loans, etc. Now, BlackRock is the actual manager for this. They are the manager. And what they say is, well, we do have a beneficiary impact. We are potentially one of the economic beneficiaries of the profits and losses because, hey, if the fund does well, we make money. If the fund doesn't do well, we don't make money. So, in that case, upon strict interpretation of FIN 46, VIEs, they will basically say you have to consolidate this as well. But as we know with the structure of a collateralized debt obligation, that it's a pool in which other investors buy into this pool of securities. And therefore, they are in fact the actual primary beneficiary of the profits and losses. Therefore, we see here the company's management has concluded that BlackRock is not the primary beneficiary of this entity, and therefore they did not consolidate the entity. Looking ahead to Goldman. Goldman has a similar footnote at the bottom of your page 10. Goldman tells us the following information. They tell us that the following table sets forth the firm's total assets and maximum exposure to loss associated with significant interests in non-consolidated VIEs, variable interest entities. And they tell us that this is the total dollar amount that they have that they did not consolidate. And further on top, right on top of this, you see also that the following table sets forth total assets and maximum exposures with consolidated VIEs. So here Goldman has made the distinguishment between consolidated versus non-consolidated. That was all as a direct result of Enron and the outbreak since then.